And you need to know what your cash flow is, and you need to understand your bookkeeping. Even if you're doing it fairly simple, or you're outsourcing it to an accountant or a bookkeeper, you still have to know how your business is doing. So we are going to have a training inside of the community of the Business of At Home Business on, well, this is the 4 numbers you need to know, but of course I'll have more detail than that. We'll also do one on bookkeeping, because we need to know at least how to read an income statement. So let's just say who I am. I'm Jane Gardner. I worked with my husband in a structural engineering firm for the last 20 years. I did most of our bookkeeping. I wasn't thrilled. I don't like bookkeeping, but I did it. Now we have a bookkeeper. Yay! But you still have to know where your money is going. So let's go and have a look at the Big Four. The Big Four numbers you need to know for business success. So obviously you have to know your numbers. So any business you have to know what your numbers are telling you. So you have to be able to crunch your numbers. You either have to get a bookkeeper to do it monthly for you so you know where you're going, or you have to do it. You need to be able to involve numbers, and by just taking a moment, look at some key figures, you could immediately increase your daily profits knowing which direction you're going. So if you ignore the numbers, you're basically ignoring the potential to make significantly more money. Once you understand how the numbers work, you can see the cogs turning in any situation. We will be focusing on just 4 key figures, the Big Four, numbers that you need to know when it comes to running a business. Revenue. Yay! We love revenue. It's an important number to know because it essentially paints the most basic picture of how your business is performing. Profit and revenue are quite similar. Both essentially describe the amount of money your company is making. In fact, if you think of profit as the bottom line, then revenue is the top line. Revenue is calculated by multiplying the price at which goods or services are sold by the number of units or amount sold. You don't take any expenses into account with revenue. Gross profit is the amount of revenue you have made minus the cost of goods sold. Net profit is the revenue minus the cost of goods sold and all the other expenses you're making. You could actually make a ton of revenue and not actually make any profit, in which case there's probably a problem with your business model. According to Josh Joffman, author of the Personal MBA, there are just 4 methods you can use to increase revenue. These are: increase the number of customers, increase the average transaction size, increase the frequency of transactions per customer, or raise your prices. So keep those in mind. Cash flow is a good number to track because it essentially paints a picture of your company's health at any given moment. Cash flow examines the amount of money available to your business that you can actually use. Cash flow is really all about having money when you actually need it, having access to funds at any given time. The term cash flow is closely related to the term liquidity. Liquidity simply tells you how much a company has available in movable funds. This is distant from the total value of the company, which will be calculated based on things like assets. Sometimes you need to quickly do a litmus test to see how your business is managing. This is where the quick ratio or asset test comes in as an equation you can use to work out your cash flow liquidity. The total amount of financial assets plus marketable securities, things you can sell, plus accounts receivable divided by the amount of current liabilities. This is a useful way to quickly see how much money you have available and to avoid a crisis in cash flow before it occurs. Price point. Knowing how best to price your products is absolutely crucial if you want to maximize your profits. Effective pricing is all about knowing just how much value you have to offer. Price too high, no one will buy it, because they'll be spending more than they'll feel like they're getting back. Price too low, though, and you won't be maximizing your profit. Beside value, what also needs to be taken into account is the amount of money it is costing you to produce the item, the aforementioned cost of goods sold. This will impact how much you are able to charge for your items because you will know the lowest price possible that still generates revenue. The difference between the manufactured cost and perceived value will ultimately dictate your profit margin for each item. While there's no hard and fast rule when it comes to calculating price, for physical items, one popular approach is something called the 1 to 5 rule. You simply take the amount it costs you to manufacture the items, cost per unit, and then you multiply that by 5 to get the overall recommended retail price that you will be eventually charge your customer. Do not be afraid to tweak your pricing. Testing different prices can be an effective way of learning what the market will accept. Expenses. Your expenses are your cost of goods sold, as well as your running costs, your staff salaries, and money that you're putting back into the business. Knowing your expenses and overhead is crucial because it allows you to work out your profit and pricing. Every business and every household even should have a spreadsheet that accounts for every expense and every income stream for that matter. By entering everything that is going in and out of your business into a spreadsheet, you can then create graphs to project how much money you will have at any given point. Be careful though, just because your spreadsheet says one thing, you may not be able to predict things like your biggest client finding a new provider next month or something like a devastating IT failure. Having a very clear outline of all your outgoings and expenses also allows you to easily see where your company is losing the most money. It lets you see how much you could save by making certain changes. Everything you spend money on as a business is an investment, and you're looking to get maximum value for minimum costs. Saving pennies across the board can result in profound changes to your profits. So, now we know what the big four are. The big four are, I think there's more than 4, but let's try and do them again. They are revenue. Where was revenue? And then there's cash flow. Very important for any business. And price point. What's the price point of what you're selling? And expenses. These are the major things that you need to know at any time in your business what they are doing. And this is going to be a course within the Business of At Home Business community. You can become a founding member. It's only $1 for a month to have a look around and find what you need inside, because there's plenty of resources and ideas as well as help at http://bohbtips.com/members. And I've kept the price of the membership cheap right now because I want you to help me build it so that we can get the kind of answers that you need at 2 cups of coffee a month. Sorry, $9.95 I think it is for after the month at bohbtips.com/members. You can check out the sales page. $1 and you can get in and learn more about your cash flow.